Hello, Nick Fenton here, Likefolio in-house options expert. Today, I'm very excited to bring to you buying put spreads, buying call spreads, also known as verticals. We're going to be talking about buying a put spread in Netflix, buying a call spread in Google. Before we do that, let's just review. We want to make sure that we have social sentiment up on the graph, chart, whatever you want to call it. So we want to go to Style, Settings. Make sure you go to the Equities tab and make sure Show Social Sentiment is checked. Next thing we want to do is we want to go to Studies. We're going to add a study. We're going down to Volatility Studies, and we're choosing IMP Volatility, which is short for Implied Volatility. So that's going to bring up the Implied Volatility chart at the bottom of our chart here. So we have a price chart at the top, social sentiment in the middle, implied volatility on the bottom. Social sentiment can only be found in Thinkorswim, so you got to make sure you're a TD Ameritrade customer. If you don't have an account with TD Ameritrade, don't hesitate. Get one now. At the end of this video, I'm going to tell you about an offer we have, so stay tuned. Let's talk about put spreads and call spreads. First thing we want to do, we want to look at our implied volatility. We want to make sure the implied volatility is at the low end of the range, which makes it more advantageous for a debit strategy. We're going to be buying premium when we're buying put spreads and buying call spreads. So we only want to buy premium when the implied volatility is at the low end of the range. So as you can see here, that's pretty much the low end of the range right there. And here we are right here currently. Low end of the range, the absolute low was around 30%, currently at about 36% implied volatility. I would say this definitely qualifies as cheap premium. Next thing we want to do, we're looking at Netflix here as a potential put buying or put spread buying opportunity. In a previous video, I looked at it as a put buying opportunity. Those puts were pretty expensive, so I'm going to show you a way to cheapen up the situation a bit, save a little bit of capital. So one observation here, when I'm looking at the price chart, is that the stock is near 52-week highs, which I believe are all-time highs actually, but I would have to double check to confirm that. We recently saw a really strong move off earnings. Here's this earnings gap. It gapped up significantly off earnings. We saw a continuation to the upside, but then it stalled out and it started to kind of falter a bit here. We have earnings behind us. We have a really big move behind earnings. It pushed up into 52-week highs and failed. So we're seeing some downside pressure. Could this downside pressure continue? I don't know, but maybe the social sentiment can give us a little bit of a clearer idea. So let's really widen that up a bit. One thing I'm noticing here is pretty much saw sideways movement here in social sentiment for the most part. Then all of a sudden, we got a fairly steep move to the downside. Then that social sentiment kind of started to smooth out, and it wasn't quite as steep, but we definitely are seeing continued downside pressure in the overall in the overall sentiment area of our social sentiment graph. So the sentiment area is this orange line graph here. I like to visually smooth it out. So as you can see here, just like with sideways, steep down, and a kind of a little less steep downside trending going on there. Another observation we have, if we pull out the trend line tool, we're looking at positive mentions here. That's the green area of the mentions. I'm going to take out this big spike here and just focus on stuff that we've seen recently. Very defined downtrend going on here in positive mentions. Very defined. So got a couple bearish things going on here that I don't think have been reflected into the price of Netflix yet. That's the beauty of social sentiment, is a forward-looking indicator, so you can spot things before they actually take place in the stock price. So I think we've determined a pretty valid reason to be bearish here. Let's look at building our put spread. So first we want to go over to the trade tab, and we want to choose our duration date. We're going to go with these Decembers with 44 days left. I like to be somewhere between 30 and 50 days when I'm buying these spreads. When I'm selling spreads, I like 40 to 70 days. When I'm buying these types of spreads, I like somewhere between 30 and 50 days. So right here, we've got 44 days until the last trading day of these options, until expiration. So we're going to choose this particular duration. Now we need to choose the strikes. I like to wrap around the money. So what that means is the current price is 123.45 in Netflix. The strikes that are around that are 125 and 120. So 123 sits right in between that. So with that being said, I would buy the 125 and then I would sell the 120. So we are wrapped around the money. I'm going to change this to one spread just to keep things simple. We're wrapped around the money here. It's recognizing this spread as a vertical. What I did there was I left clicked on the ask. So let me just redo that. Left click on the ask, hold the control key on your keyboard, and left click on the bid of the 120s. And then that brings it down there and creates this vertical. So we're going to do one spread. We got the Netflix 125, 120 put spread. Buying it for $2.35 debit. Right click, analyze trade. So now we are taken over to the analyze tab. You want to make sure you're in the risk profile area, not in the ad simulator trades, not in probability analysis or any of these other ones. Make sure you're in the risk profile menu. So this is going to show us our trade. The first thing we want to do is make sure that we are familiar with what the risk profile is. Over here on the y-axis, you'll see we have a 0, which is our break even on the trade. Anything above this 0 line is going to be profit. So that means you're in the profit zone. Anything below it means you're in the loss zone. So that's our profit loss on the y-axis. X-axis just shows the different prices in Netflix. First thing we want to do is go over here to this Show Actions menu, just to the right of that plus sign. Left click, Set Slices, Break Even, choose the 12/17/16 date. That takes away all the other slices, puts one slice on the break even of the trade. So where this trade meets the break even point. So the price at which this trade breaks even is approximately 122.54. 122.64. So 122.65, somewhere in that range. What we can do now is right click, slices the chart. Left click on the Show Actions menu, slices the chart, hit that square, and it's going to show us our break-even line right here. So essentially, our break-even is pretty much right at the current price of Netflix. So we're basically saying we anticipate Netflix going down from here. We're pretty confident. We're taking an aggressive approach. If we go back here to the Analyze tab, it's going to give us our probabilities of this trade being successful. So you can see here we have a probability of 51% of it being profitable, because this is the profit area. Anything to the left of the break even is where we start making money. Anything to the right of the break even is where we start losing money. About a 49% chance of losing money. So it's pretty much a 50-50 coin flip we've got going on here. And we are essentially risking this $235 that we paid for the spread to make $265. So we've got a 50-50 coin flip, but the risk is less than the reward. So that's a situation I can get behind. Generally with 50-50, your risk and reward are going to be equal. Well, this one we have 235 risk, 265 reward, and only 1% differential, 2% differential here in our probabilities. So pretty much 50-50 coin flip, but we get risk less to make more. Just slightly. So we have a little bit of edge going on in this particular trade. Just a touch. Nothing real significant. But yeah, so just to kind of give you a comparative analysis here, when I was looking at buying the puts in a previous video, they were going to cost around $9, if I remember correctly. And this particular trade cost $2.35. So $900 for a one lot if you just buy the puts outright, or $2.35 if you do the put spread. Significant capital savings here. So let's take a look at the bullish opportunity the bullish version of this, which would be buying a call spread. I noticed in Google that we have, first of all, implied volatility is closer to the bottom end of its 52-week range than it is to the top end of its 52-week range. So we've got our implied volatility chart. Here's the top end of the range, 40% roughly. Here's the bottom end of the range, right around 12%. And we're currently at 21%. Uh-oh. My oval tool's jacking up on me. There we go. So we're right around 21% currently. Definitely closer to the lower end of the range than we are to the high end of the range. So I would prefer to buy premium here versus sell premium. Looking at the chart itself, I noticed that we've kind of stalled out a bit and we're seeing some downside pressure here. So we really just kind of saw sideways momentum going on. Then it finally kind of started to break a bit higher. That was fairly short-lived, and now we're seeing some pretty significant downside pressure taking place as we speak. Earnings are behind us, so we don't have any earnings risk going on here. That's a beautiful thing. But what really caught my attention was the fact that we've got a decent bullish case going on here. We've got this interesting scenario where the sentiment, which is the yellow line graph here, been pretty much sideways. Then all of a sudden we have this major boost to the upside. Major boost to the upside. And since then it's been riding a all new high in the sentiment area, just riding it sideways. So we're seeing some really strong sentiment. But along with that, we saw a really solid move in the positive mentions as well. So if we pull the trend line tool out, you can see we've got this nice uptrend going on in positive mentions. Now that's pretty solid. This big spike here kind of corresponds with the big spike in sentiment, and it's pretty much flattened out from there, but you could argue that there's a nice little uptrend going on in positive mentions. What we aren't seeing is that being reflected in the price of the stock yet. So if we look at where this spike took place, it was right around in this area. Okay, and since then we've seen sideways. We saw a little bit of upside, but really it's pulled right back to the price point at which we saw this first take place. Now it takes a little while for this social sentiment to get played out into the stock price in most cases that I've experienced. So it very well could be getting ready to play out. We're looking at about 2 months since we saw this spike, 2 months since we saw the uptrending in positive mentions. It's held this area pretty well. This should start getting reflected in the stock price fairly soon. The fact that we've pulled back to the levels where it initially started to really spike up makes this an advantageous time to position bullish, in my opinion. So let's take a look at what kind of spread we can build out here. Let's go to the trade tab. And again, I just want to reiterate, I like to be around the money. I'm going to stick in this same month here because it's 44 days until expiration. I'm going to stick in the same month, and we're going to wrap around the money. So the current price is $7.90. We want to buy the 785s, and then we want to hold the control key. So we clicked the ask on the 785, and then I'm going to hold the control key on my keyboard, and then I'm going to left click the bid on the 795. So we're wrapped around the money. We bought a 10-point wide call spread here, whereas in the case of Netflix we did a 5-point wide put spread. So this one's a little bit wider. You can see the debit is $5.45. Let's right click, analyze trade. We're looking at the risk profile once again. Just to reiterate, we have our profit loss on the y-axis, we have the price of Google on the x-axis. I'm going to manipulate this a little bit to give a better view. To manipulate, you can just left click and hold on the numbers on the x-axis to stretch it out a bit, and you can left click and hold anywhere inside the graph to move it left or right. Just slide left or right with your mouse while you're holding the left click down. Okay, so I'm going to go over here to show actions menu, left click, set slices to break even, choose the settlement date. It's going to move our break even over here to 790.44. So essentially, we've got another 50-50 coin flip. 49.56 in the profit area, 50. So this is pretty much right at 50-50. The difference here is it's not as advantageous as the Netflix situation was. We're risking $545 to make $455. So risking $545 to make $455. That doesn't line up with our 50-50 probability of success. I would not say that this is nearly as advantageous as the Netflix trade. I would prefer the Netflix trade. I liked the scenario better as far as the bearish nature of the sentiment. It was just a much stronger case. Plus the implied volatility was cheaper. So, but this gives you an idea of what it looks like here. We've got our break even in the middle. Anything at or below our 785 price strike is going to be max loss. Anything at or above the 795 is going to be max profit. Basically 790 is our break even. We've got a 50-50 chance, 50-50 probability of success. So of these two, Netflix is my favorite. Just wanted to kind of give you an idea, quick overview of this particular style of trading. So we looked at Google buying a call spread around the money. We looked at Netflix buying a put spread around the money. Both were 50-50 probability of success. Netflix, you're risking a little less to make a little more. Google, you're risking quite a bit more to make quite a bit less. So as far as the edge goes to Netflix. It was a stronger case. I think it's a great trade. Very actionable idea. I love when I see actionable opportunities. I hope you love it too. I hope you enjoyed this video. I hope you learned something. Take care. Special pro tip alert. Visit learn.likefolio.com. We've got more Likefolio Trade School videos, all exciting, jam-packed with education, beneficial, actionable, awesome. Also going to have a special brokerage offer for you, so make sure you visit.